Hello, and welcome to Trade Finance Talks. I'm Mark Abrams, Director at Trade Finance Global. Welcome back to the fifth and final episode of TFG and Standard Chartered's podcast series, Future of Trade. For the closing episode of this series, we're digging into one of the topics that now feels inescapable at industry events: digital assets. Could stablecoin be the next payment rail? Can tokenized collateral unlock working capital? What stage are regulators at around the world? And what does this all mean for corporate treasurers on the ground? We can't provide all the answers, but we can move the discussion forward. I am joined today by Kevin Chang and Emily Chan, who will be separating the buzz from the use cases. So Kevin, Emily, lovely to have you here with us today. Please, can you introduce yourselves?
Absolutely, Mark. Thanks for the invite. My name's Kevin Chang. I look after our trade and working capital business for Hong Kong, Greater China, and North Asia. And together with that, I actually look after our trade digital assets capabilities as well. Emily, to you.
Thanks, Kevin and Mark. So I'm a product manager in Kevin's global digital asset team for trade. Day to day, basically driving digital asset initiative with our clients, of our coverage, and also partnering with different internal and external stakeholders on the various initiatives.
And Kevin, let's start by defining what we actually mean by digital assets and tokenization in the context of global trade. Can you give us a bit more information on what that is and how you see it?
Yeah, no, that's a really good question because digital assets itself, right? It's a very hot topic, and a lot of people have different understandings of what digital assets mean. So it's good to start from scratch and really look at what is the purpose and what is digital assets really representing. In a nutshell, digital assets represents a form of digital value or digitizing a contractual right. Okay, so tokenization itself is the process of converting that right or that value, that asset, into a digital token that can then be transacted, exchanged on chain through you, through myself, to others who are interested in acquiring it. I guess pulling it back to the trade context, what we see from a tokenization perspective, from a digital assets perspective, are uses of tokenized money. So to that point, things like stablecoin, things like tokenized deposits, or trade finance that can be used for settlement and cross-border payments. There are other areas such as tokenizing trade documents, which is now slowly being adopted and being explored across multiple jurisdictions. So things like bills of exchange. Again, it provides more visibility and ownership efficiency when we transfer between multiple parties. Tokenizing trade finance assets is something that I'm very excited about, particularly in my space. Again, how do you take assets or values such as receivables, payables, or invoices and tokenizing that so that can also be used for financing or for tapping into alternative investment capital. So, in a nutshell, that's what digital assets is, and in the context of trade, how digital assets can be very useful.
And just staying with yourself, why is tokenization becoming such an important topic in global trade right now? And why should corporates care?
Tokenization is not just about a technology capability or technology upgrade, right? If you really think about what it does, the value it brings, it's the ability to shift how value, risk, and information can move cross border in the context of global trade, right? The challenges that we see in trade today is it's slow, it's inefficient, it's very documentary based. So with this ability to tokenize, things will gradually move faster. So there'll be faster settlement. There'll be more access to capital, open new channels. And of course, it increases transparency, which is one of the key areas, of course, in global trade, so that we understand what moves from and to and where the cash flow comes from and to. This is going to be a very true and beneficial upgrade to the way things will be done.
So really interesting. But actually, if we look at real use cases, coming to both, and Emily, starting with yourself, what are those promising use cases today for tokenization in trade?
Sure. I think one area that we see a lot of traction or buzzword that we hear a lot is collateral mobility, right? That's one of the sort of recognized as a killer use case within tokenization. And we see a lot of adoption tractions within the margin financing space or even the repo space. And in fact, Standard Chartered ourselves has actually launched a collateral mirroring program with external partners, which we enable clients to use their tokenized money market funds as an off-exchange collateral to facilitate their trading activities on exchange. And if you think about this in the context of trade, right, can we not do the same? Because these tokenized assets being a collateral can actually be utilized for various purposes. And in the case of trade, can we also take these tokenized assets as a collateral so that the bank can offer a trade facility to the client, be it a lending facility or credit or guarantee facilities that the client needs working capitals or some form of trade support in the normal course of business. So this is one of the sort of direction that we are thinking in terms of how this could be adopted within trade. And from a benefit perspective, it's clear that collateral mobility basically can help clients to increase their overall sort of capital efficiency because they can now retain the upside potential of the asset they use as a collateral and also earning the yield from the underlying asset while at the same time fulfilling their sort of trade business objectives. So this is one of the use cases that we are thinking of, and there's a lot more. Kevin can also chip in to share some of the use cases that you are seeing.
I think what Emily mentioned is something that most banks or most of our corporate clients are also thinking about, right? It's something that will be in the near to middle term. But if I were to mention something, what's immediate, what use cases are actually being applied today? It's very simple. It's the new payment rails for cross-border trade. And effectively, it's going back to the point on stable coins. How can we use stable coins as a form of settlement? How can we collect stable coins as a form of payment? That's something that's almost an immediate use case that we see the industry adopting already.
And if we talk about, I guess, why now, and touch on the regulatory environment, how has it actually changed in recent years, and why does it make tokenization more, I guess, commercially relevant today than it was before?
I think in the past few years, we've seen regulators across the globe. They've basically radically changed how their stance or position is with regards to blockchain, smart contract, digital money, and also tokenized access. In the past, they kind of treat it like an alien technology, which would create additional risk, and therefore they even introduce sort of frameworks to put punitive treatments on banks and corporates for leveraging those technology. But nowadays, a lot of these regulators are now recognizing a technology neutral approach. So same activity, same risk, and therefore they apply the same regulation. And that's kind of formed the foundation of how regulators are thinking nowadays. And in addition to that, last year particularly, we have seen regulators now taking the driving seat adopting or introducing new regulatory frameworks. So the most prominent one is definitely the US Genius Act. And in the other parts of the world, like Hong Kong, we have the stablecoin ordinance that it's also come into effect with license issued not long ago. And I think these stablecoin framework that we have seen has really been a catalyst that have motivated institution corporates to start looking into the digital asset area and also investing into identifying new use case, leveraging these new sort of regulations. And on top of that, right, stablecoin is just the payment rails. How can you create an ecosystem with the right infrastructure, custody, all this to support that ecosystem setup? So we've also seen regulators now expanding their scope. So US is looking at the Clarity Act, and for say Hong Kong, Singapore, they are also driving related initiative to drive tokenized asset adoption, such as Project Ensemble, Project Bloom, and Guardian. So all these have been pushing the markets and slowly sort of changing and building that transformation in the industry.
And that's helpful from a regulatory perspective. But I guess when we actually look at, we touched on this before, when we look at a client and general perception perspective, I mean, Kevin, coming to yourself, what problems, what pain points are companies actually trying to solve through digital assets and tokenization?
That is a really good question. it extends on your previous two questions, which is what are use cases and what is the regulatory environment doing to support this? I guess what I'll say is the regulatory environment has progressed a lot over the past few years, but they're progressing at different paces, different jurisdictions, different markets. Some are more clear, while others are not. Now, in the context of global trade, it's not a single market that we look at. We have looked cross border. So, wherein you have a country where they're more advanced in terms of adoption of, let's go back to stable coins, whereas another country still has no clarity, no regulatory guidance on that, then it creates an issue. To your point, a pain point for the client. Now, to my other point, which is using stablecoin as a form of payment, as a disbursement, we are seeing that. And I can tell you for a fact that we are seeing within the trade ecosystem, more and more buyers or distributors are requesting to use stablecoin as a form of payment. And it's beneficial to them because, particularly in emerging markets, where obtaining US dollar, for example, could be more expensive. But then, to my earlier point, where you're now paying into a market where the supplier and the regulatory environment is not as clear, then the supplier now has a pain point in terms of saying, hey, can I actually collect stablecoin? And what does that mean for me? Right? Obviously, the supplier, or in this case, perhaps a client, wouldn't want to say no. But now it becomes an area where they need to solve, they need to address digital assets. They're being pulled into the ecosystem of digital assets and how they need to address it. But over time, what I would expect is these regulatory guidances will become more and more clear. So it's important for clients as well as banks like Standard Chartered now be aware of this and one, engage with clients, advise them, but also to provide solutions where you could potentially work together, co-create to bypass some of these unclarities or these pain points.
So you touched on the regulatory environment, and Emily helpfully talked about it and kind of where we've got to, and also we've got to perceptions. But I guess now we're at this inflection point. Is that why we're hearing about it a lot more in terms of adoption? Also, I guess what signals is the market telling you that we've reached that point?
So to Emily's point, and actually to what I mentioned, things are moving a lot faster. There's more and more clarity. We are at an inflection point. Digital assets have been talked about, in pre-COVID, pre-pandemic areas. I always like to use a good example of the smartphone, where the first smartphone provider, if I recall correctly, it was the Palm Pilot Trio that came out in 2002. It actually had a lot of fantastic functions, but at that point, the market wasn't ready yet, and hence you don't see the Palm Pilot today being used globally. But 5 years after that, 2007, Apple came out with their smartphone, and it was at that time that the market customer ability to use and accept it came about. This kind of applies to digital assets as well. Over the past 5 years, a lot more adoption, a lot more clarity, a lot more interest, coupled together with regulatory guidance, coupled together with financial institutions providing solutions. All that has helped with the adoption in this pace that it will be adopted. So, from my perspective, I'm really confident in the next 12 to 24 months, we will see a lot of advancements across the entire ecosystem where digital assets will be readily adopted and integrated into our day to day financing, day to day trade, and business.
And if we actually talk about the preparations, or I suppose in this environment that we're in, what do clients need to do? So in terms of to get there, so if their counterparts are moving ahead and they're not, what do they need to be kind of internally? What do they need to be looking for? How do they prepare for what's coming? And how do they kind of see that in terms of the market, and who do they speak to?
So I would say we actually see different set of clients, right? In the earlier days, it's basically the clients that have genuine interest in adopting digital asset that is driving the conversation. They come to the bank and say, "Hey, how can I adopt this technology to sort of improve my treasury management, improve my operation process?" But as Kevin has mentioned earlier, right now we are seeing more clients that come to us to inquire use cases because they're pulled into this ecosystem because their counterparty are using stablecoin, or they're basically being asked to sort of change their operating model to support this. So what we think the client should be start looking at firstly and fundamentally is basically how to upskill their internal teams first. Because digital asset is not within a certain department. It cut across the treasury department, the finance department. How do you manage the payment? How do you manage the stable coin to and enjoy you from other type of tokenized asset? And it also involve the procurement, the trading department. If you are trading with your counterparty, settling invoices in the different form of money. So it's helpful to always start training the team, let them know what digital asset is and shift their mindset. And then the next step will probably be more sort of rethink their operating model. If they have a counterparty in certain markets that is asking for them to adopt digital asset, can they sort of change how they operate, how they enable that counterparty engagement in their operating model? And then lastly, having that foundational capability to connect themselves to the digital asset world. So, for example, if you want to start collecting stablecoin, then you will need a wallet, right? Then do you use a self-custodian wallet, or do you work with a bank like Standard Chartered to open a custodial wallet to enable those transactions? How do you off-ramp these stablecoin into fiat so that you can facilitate your other day-to-day business operation? So those are the next step you need to think through so that you know what the sort of infrastructure you need to have in place to connect to the ecosystem.
And thanks for that. And Kevin, moving to yourself, I mean, Emily's touched on it in terms of wallets and infrastructure, but what role should banks play in this journey when we're talking about helping clients from navigating regulatory, cybersecurity, and just implementation of all these changes?
I think banks have to play a role as a partner in this evolving digital assets world. And that essentially means to one, be one of the leads, the first to understand more, and then become a trusted advisor to your clients. I mean, Standard Chartered, we've done quite a bit of work around this space. We have our Standard Chartered Future Trade Survey, where we're able to engage with a lot of our clients, senior executives, to understand what they're thinking of digital assets is and how that would impact them from a trade finance perspective. This is very important information. And this is some information that as a bank, we could also share with their peers and other industry peers. So they also understand the direction and what's needed to help them go through this digital assets journey. Banks cannot wait. The infrastructure, the technology, the internal requirements across risk and compliance and cybersecurity, there also needs to be an element of investment. And why I say that's very important is by the time digital assets scales large and is readily adoptable, then it's too late. And only investing then, and if we're all been through this where investments takes years. And it takes a lot of decisions. There's a lot of legacy requirements that need to be addressed. You can't wait till it's ready. You need to start investing now. And only when you invest now and take that decision, you'll be ready when the clients come knocking on your door. And again, it's also acting as a bridge, a broker, as I could also say, is again connecting your clients with the broader ecosystem, their counterparts, other platforms, other partners, the blockchain networks, again, to enable a client to assess, understand more, and again, work together with you in terms of how they can adopt digital assets for their trade financing needs.
And I guess just to finish off on those points, so coming to you both, and Emily, starting with yourself, and so if we think of those kind of, as you've touched on, opportunities, how should corporates think about the next wave of opportunities and what they need to do to prepare going forward? Yeah, the future, and how do you capitalize off those opportunities?
I think we covered a lot in the earlier bit on how they can prepare themselves. I think simply put, right, they have to start understanding what's going on in the market, which market is relevant to them, what are their counterparties doing, or what are their peers doing, and start experimenting with it. It needs not to be like a fundamental operation change in their entire process from day one, right? Just start building that capability, enabling that connectivity to the digital asset world, experimenting small, be it investing in tokenized money market fund, start holding a stable coin or tokenized deposit, and then using this as an exchange mechanism with your counterparty. Just start co-creating, and definitely can always go to a bank like Standard Chartered for any advice, and we can help you through to structure how it will work in your business scenario.
If I could close off, and I think Emily touched on it earlier in terms of the cultural mindset, right? Upskilling, educating. Because I can share with you during my interactions in the industry, speaking with corporates, I've heard them come to me to say, actually, you know what? Digital assets is a problem. It is a problem. We don't want anything to do with it, but you know what? We've been hearing so much about it. We don't have a choice. My response to them is actually, you know what? You may view it as a problem today, but it really is an opportunity in the future that can help you in many ways if you're willing to adopt it. And again, to what Emily said, Standard Chartered is here to help them. We're going through the journey and we'll love our clients to also join us through our journey so we could do it together.
A nice way to finish off. Kevin, Emily, thank you so much for joining us and look forward to the next discussion.
Thanks, Mark. Likewise.
Thank you.